As a beginner looking to invest, it can be extremely hard. There's so much information out there filled with fancy terms and jargon, making it very overwhelming. So that's why I put together this video to give you a simple and to the point overview of investing in the stock market. So let's begin. What's going on, everyone? My name is Arjun and welcome back to the channel. In today's video, we're going to be answering the question that I get asked more than anything else, and that's how to get started with investing. So without further ado, let's start with what is a stock and the stock market. A stock is essentially share of ownership in a company. So when somebody says I own a share or equity in the company, they're all referencing the same thing. It's just partial ownership in that company. So for example, if you buy a share of Facebook, it means you own a piece of Facebook. Now, this is probably going to be a very small piece because there are millions of Facebook shares, but you still own that small sliver. Companies issue stocks to raise funds, usually to invest in growing their business. So this could be in something like R&D, maybe launching a new product line or expanding into other markets. This event of issuing shares is called an IPO or going public. And that's what Airbnb and DoorDash did in these last couple of months. Once the company is public, their shares are listed on the stock market, which is basically a place for buying and selling stocks. Now that you have the basics down, let's talk about why you should start investing, because this is one of the most important parts in the video. People who only save lose money to inflation. Now, what do I mean by that? Let's take, for example, an apple that right now costs $1. Next year, the same apple costs $1.02. That just means that your purchasing power is declining over time. And that's inflation in a nutshell for you. If you just leave money in your bank account doing nothing, the best interest rate you'll possibly get right now is maybe 1% if you're lucky. Inflation, on the other hand, has averaged around 2% in the US in the last 20 years. So by keeping money in the bank account, your money is becoming less and less valuable. But the stock market, on the other hand, has averaged around 9% annually in the same time frame, far outpacing inflation. While we're on this topic, please also inflate the like button and subscribe to the channel for more content like this. It's also never been cheaper or easier to invest. Nowadays, all you need is this tiny little device and you can buy and sell stocks in seconds. And that's made investing a lot more accessible to everybody. We're also living in the times of commission-free trades. Just a couple of years ago, for every trade that you made, you'd had to pay anywhere between $5 to $10. But nowadays, most brokerages don't charge you anything. If you're slowly starting to get convinced, let's talk about how to actually buy these stocks. The first step is to choose the platform or the online brokerage you want to open an account with. There are new age app-focused brokerages like Robinhood or Webull, for example, that have nice UIs and are easy to use that beginners can look into. There are also more traditional brokerages like Fidelity or Vanguard, for example, that may not have as slick of a UI, but have more extensive research tools, have better customer support, and also have the ability of having all your accounts, including retirement accounts, in one place. If you're interested in signing up for any of them and getting a free stock, I leave referral links in the description below. The second step is to fund your account, which is a pretty simple step. All you need to do is link your bank account and transfer the funds over. Once you have money in your account, you can buy and sell shares as you please. If you want a detailed demonstration of how to do this, I will link to one of my previous videos somewhere up here, and that walks you through everything step by step. Now, there are thousands and thousands of stocks out there, but how do you go about choosing which one to buy? You could do what's called fundamental analysis, where you read the company's financial statements, you assess the competitive space, you evaluate the management team, or you could do what's called technical analysis, where you examine and predict price charts. Not only that, once you buy the stock, you have to keep monitoring its performance as well. If you have the time and energy to do this, go ahead. It can be a very rewarding approach, but most of the beginners I've spoken to want a more passive, hands-off approach. That's where index funds come in, which is something I talk about non-stop on this channel. An index fund is basically a collection of stocks that track a particular index, like the S&P 500 for example. So when you buy this fund, you own a small piece of all of the stocks contained in that index. This gives you both decent returns as well as diversification. So it's a big favorite for beginners. Now, I'm not telling you what to invest in, but some of my favorite index funds are VTI and VOO. Alright, so now that you've bought these stocks, how can you make money from them? There are two main ways you can make moolah in the market. The first is by selling a stock that has appreciated. And this is what we call capital gains, where you buy low, you sell high, and you keep the price difference. So for example, if you buy a stock for $100 and sell it for $110, you've made $10 in capital gains. The second way is through dividends, which are shares of profit from the company for just owning the stock. Apple, for example, pays you 82 cents in dividends for every stock of Apple that you own. There are other ways to make money like options trading, but that's more complex and has no place in a beginner's video. So I'm going to save you from that. But what you cannot save yourself from are taxes. There's just no escaping them. You do have to pay taxes on money you've made in the stock market. You pay capital gains tax only when you sell the stock. So if you buy a stock and just hold on to it, you will only have to pay tax when the sell order goes through. Dividends are also subject to taxes as you receive them, but they're generally taxed at a lower rate. Okay, so how much money do you need to start investing? The answer is not a lot. You can start as small as you want with as little as $5 to $10 even. Not having hundreds or thousands of dollars to start should not hold you back from investing. When I first started investing back in 2014, I started with $50 a month because I just didn't have the extra income at that time. That's why I like the stock market so much, because it has a very low barrier to entry versus something like real estate, for example, where you'd need tens of thousands of dollars for a down payment, and then you have closing costs, and then you have maintenance, and this can all add up to massive amounts. This also means that you can get started quite early on in life. Maybe not as early on as Warren Buffett, who started at age 11, but you can still get started with small amounts and get your feet wet even in your teens. Next, we move on to another commonly asked question. Is investing risky? I don't want to paint a nice rosy picture for you all and not talk about the risk at all. There will always be some element of risk associated with investing. But that doesn't necessarily make investing as a whole risky. Before you even think about investing, make sure that you have an emergency fund in place and you've paid off all high interest debt because they take first priority. Then understand the level of risk you're comfortable taking and then create an investment plan around it. Individual stocks are more on the risky side, and then you have index funds which are in the moderate range, and then you have bonds which are more on the conservative safe side. By the way, bonds are just loans where you are the lender and the company or the government that you buy these bonds from are the borrowers. Do not put money you need in the next 2 to 3 years in the stock market. Case in point, let's look at the S&P 500 charts. If you had bought in 2008, you would have seen it go down in value by almost 50%. And if you had panic sold at this point, your view on the stock market would have been very bleak. But if you had stayed true and held on without selling, you would have seen it bounce back stronger than ever. That's why I like to have a long investment horizon and only put in money that I don't need for the next 5 to 10 years. I could go on and on about this stuff, but I honestly feel like experience is the best teacher. It's only when you put in the time, you research a stock, you buy it, you see its price move up and down, and you eventually sell it, that you understand how the whole system works. So try it out for yourselves, even if it's only small amounts. Stay invested for the long term and let compound interest work its magic. If you have any questions for me, please let me know in the comment section down below. Please also share this video with your other friends who are looking to invest. I did put in a lot of time and effort into making this video for y'all, so I'd greatly appreciate it. That's all I have time for today. Thanks again for watching yet another video of mine. I will see you next time.